Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The national government's debt service more than triples in September as amortization and interest payments surge sharply. Rice import ban is extended until the end of 2025, aimed at stabilizing farmgate prices and supporting local farmers. And oil prices climb after OPEC-Plus decides to hold off on production hikes in the first quarter of next year. First, let's take a look at how global financial markets performed. Wall Street ended the week on a high note, lifted by strong tech earnings and optimism around corporate outlooks. The biggest boost came from Amazon's upbeat forecast, though gains were capped by concerns that the Federal Reserve is turning more cautious on rate cuts. The S&P 500, the Nasdaq Composite, and the Dow all posted weekly gains, extending their longest monthly winning streaks in years. Amazon shares surged 9.6% to a record high after projecting stronger than expected quarterly sales. The rally helped lift the consumer discretionary sector by 4%, its biggest one-day gain since May 12.
I think what you're seeing is a company that is delivering. They are rationalizing the business because they overhired during COVID. And so now what they're trying to do is become quicker, faster, reduce layers in corporate management. And indeed, that is what they're doing. And they're going to grow the retail business with the same number of employees, but they're going to double it in 5 years. So that's pretty impressive. And as a shareholder, I kind of loved everything. And I think you continue to hold it. If you don't own it, I actually even think you buy it here.
Shares in Wall Street were all in the green. The Dow Jones Industrial Average up by 0.1%, the S&P 500 up by 0.3%, and the Nasdaq higher by 0.6%. Over in Europe, markets ended lower. The UK's FTSE 100 down by 0.4%, Germany's DAX lower by 0.7%, and France's CAC 40 lower by 0.4%. Here at home, the cost of borrowing is catching up with the government as its debt bill triples in September amid massive loan repayments and higher interest costs. The Bureau of Treasury reports total payments at 327.89 billion pesos, up 250% from 93.61 billion a year earlier, though down by half from August. Amortization accounts for 75% of the total, surging more than 11-fold to 246.17 billion pesos, driven mainly by domestic principal payments. Interest payments climbed to 81.7 billion pesos, with most going to fixed rate and retail treasury bonds. Foreign debt payments declined both in amortization and interest, but overall, debt service remains heavy as the government faces steady maturities ahead. The Securities and Exchange Commission is moving to ease audit rules in what could be a game changer for small businesses weighed down by compliance costs. Under the proposal, companies with total assets or liabilities of 3 million pesos or less would no longer need audited financial statements, only reports certified by their treasurer or chief financial officer. The move aims to cut costs and simplify requirements for micro, small, and medium enterprises. The SEC says it will continue to monitor companies through regular reviews and inspections, ensuring oversight remains strong, even under lighter rules. If approved, the new policy will apply to financial statements for fiscal years ending December 31 onward. To keep food prices stable and farmers afloat, President Marcos Jr. is extending the rice import ban until the end of 2025. Since the import ban took effect on September 1st, rice imports have fallen from 5.4 million metric tons to 4.9 million. The policy has helped stabilize farmgate prices, encourage higher local output, and clarify trade and pricing policies. Critics, however, argue that the 15% import tariff is too low and should be restored to 35% for ASEAN countries and 50% for non-ASEAN nations to deter cheaper imports. Meanwhile, the Department of Agriculture reports adequate national rice supply, with retail prices holding steady at around 40 pesos per kilo for regular milled and 42 pesos for well-milled rice. cooler temperature is slowing power consumption, tempering growth for the country's biggest distributor. Meralco reports a 0.4% drop in energy sales from January to September, totaling 40,719 gigawatt hours. Full-year sales are seen ranging from a 0.5% decline to a 0.8% increase, even with a 2% rise in customers. Meralco expects a rebound next year, supported by normalizing weather, continued connection growth, and new demand from repurposed POGO spaces turned into offices. Chairman Manuel Pangilinan remains optimistic that core net income will rise 14% to 40 billion pesos, keeping the company on track to hit its 50 billion peso profit target for the year. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Monday morning. Right now, I'm seeing a mixed picture. The Nikkei 225 is well entrenched in positive territory, up by 2.1% in early trade. Hong Kong's Hang Seng Index up by not by as much, up by 0.3%. Shanghai's Composite going the other way, lower by 0.2%, and Singapore's Straits Times Index going the other way, up by 0.3%. Here at home, we're coming back from a long weekend after a cautious finish to last week's trade. Last Thursday, the Philippine Stock Exchange Index slipped 0.6% or 34 points to close at 59.30, snapping a two-day climb as investors turned defensive ahead of this week's GDP and inflation data. Trading volume also thinned to just 4.98 billion pesos, down from nearly 6.5 billion pesos in the previous session. A sign many traders stayed on the sidelines going into the break. The weaker close came as the peso slipped further against the greenback as investors waited for new clues on economic growth and corporate earnings direction. Now, the market opens this week focused on Thursday's third quarter GDP report, with traders looking for signs of stability after a month-long slide that's left the index below the 6,000 mark. Taking a look at the main gauge this morning, as of 10:10, we are seeing weakness across the board. Main gauge is down sharply, down by 2% to the 5800 level at 58.13. Broader all shares mirroring the weakness in the main gauge, down by 1.4% to 35.45. The financials down sharply, down by 3.1% in early trade. Industrial counter down by 1.4%. Holding firms down by 1.2%. Property counter down by 1.5%. Services counter down by 1.6%, and mining and oil counter down by 1.9%. So we're seeing sharp weakness early on. Volume is thin. 171 million shares have been traded, valued at a hefty 2.44 billion pesos. So they're selling the bigger names. Market breadth is very bullish. Very bearish. We've got 94 decliners, 28 advancers, and 71 stocks unchanged. Now, taking a look at the currencies market, the peso opens at 58.80 against the greenback, up from its previous close of 58.85. Now, as we mentioned, Philippine stocks are under pressure, down about maybe a little more than 9%, about 10% year to date, and hovering near at 5,800, its weakest in many months. The sell-off is deepening as corruption allegations over flood control projects erode confidence, trigger foreign outflows, and keep the peso at the bottom of Asia's pack. And now, a new trade twist. The United States is granting zero tariff access to several ASEAN neighbors, but not to the Philippines. Malacanang says that the exclusion is meant to protect local industries, but critics warn it risks hurting export growth, widening the trade gap, and slowing GDP. So what does this mean for markets, investors, and the economy into 2026? Joining us now is Ed Francisco, the president of BDO Capital and Investment Corporation, one of the country's most seasoned capital market leaders with decades of experience spanning equities, fixed income, project finance, and advisory. Good morning, Ed. Thanks for being here with us.
Good morning, Nene. Good morning, Mikey.
Okay, Ed, what is happening with our stock market? We are now at the 5,800 level. Nothing major has come up, but the selling is heavy this morning. What do you think is going on here?
Seems like what movie was that? Back to the Future, because I don't understand. Usually people will sell before a long weekend, right? Because of the weekend, they don't want to be long, so they want to hedge. But they're selling after, and nothing happened. So I'm as dumbstruck as you, Mikey.
Yeah, right. Interestingly, we started the year with, I wouldn't call them lofty, but expectations were for the PSE index to finish the year at 6,800. We are at 5,800 right now. Looks like we'd be lucky to end the year at 6,000. We're closing the year under pressure. Pesos hovering at 59 to the dollar. Lots of selling after the flood control scandal. Adding to that, the new twist. External headwinds, the U.S. granting zero tariff access to Thailand, Malaysia, and Cambodia, but excluding the Philippines. Ed, from a macro view, how does all of this change your economic outlook for 2026 in terms of growth, investor confidence, and capital flows?
Yeah. No, I guess let's take it one by one. The import tariffs being reduced for our neighbors is, I guess a little disturbing. Why were we not given also the same relief? No, that's one. That's just from a sentiment perspective, but from a macro perspective, since exports are really small anyway for the Philippines, it won't have that much an impact, at least from the macro. Of course, I feel sad for the exporters because they'll be hit. In terms of capital flows, it's more really sentiment driven, as you said. Uh, there's really no change. The corporates are generally doing well. GDP is a little slower, right, than growth. I guess we might be at the 5.4, 5.5% full year, as opposed to the original 6%. But it's still very good compared to the rest of the world. So what's really hitting us is really more negative sentiment because of all the corruption scandal, Mikey.
Yeah, going back to that zero tariff access, that twist, the big win for our ASEAN neighbors, but not for us. What are the implications for us and our supply chains, and how could this pressure our industries, and what do we need to do now in response to this?
Yeah. No, I guess it's all really more of a wake up call for us. Admittedly, our experts are weak, but what we also have to do is we really have to look at alternative supply chains. We have to, I guess that's BOI, Department of Trade, etc., working with our neighbors because we have to improve the inter-trade flow in ASEAN, for example. Why go to the US when hopefully we have value to sell other products in the rest of Asia? That's one. So there should be less dependencies. And because of that, at least that will make us more resilient.
Yeah, so it's about retooling so we can respond to this strategically, both in trade policy and what now will our investment pitch to the world be, Ed?
Yeah. No, our investment pitch hopefully will still be, I guess, the at least stable. The economy is stable, very high consumption driven, low still the good English and the low average age. So those are still the strengths, right? Of course, there'll be some weaknesses, but those are challenges being addressed. So hopefully, the longer term things that have to be done, like improving the education system, improving infrastructure, that's in place. No, and then power is being improved. We have more renewable energy. So it will also attract investors, hopefully.
Yeah. Talking about interest rates, the U.S. Federal Reserve cut interest rates for the second time this year. The BSP has eased by 175 basis points since August of 2024. But risk appetite is pretty soft. Why is it that monetary relief hasn't lifted market sentiment?
Yeah, no, it's sad. No, on one hand, no, maybe I'll also just give some contrary data. Yes, you'd feel that the sentiment is weak, especially from the foreign side, the PSE side. But then on the other hand, when you look at the loan growth is fast, still fast, it's still double digit. So it's showing that the economy is still moving. And the loan growth is the better barometer of really the SMEs, the middle market, and the large corporate. So at least, Mikey, there is really strong loan growth. We're seeing it. Admittedly, because of what's happening now, some are recalibrating, some are making major decisions if they proceed with their capex plans or should they slow down because if there will be expected slowdown. But then on the other hand, at least since fourth quarter last year, we were seeing good loan growth and it's continued. It's supported by the numbers in the banks.
Yeah, loan growth, that's a great barometer right there. Another barometer, the capital market pipeline. Ed, from your desk, how are things looking as we head into 2026? What's on the docket and what isn't?
No, generally, what happens is our pipeline gets longer because the deals that we had wanted to do this year are pushed back to next year. So these corporates are not stopping anyway. Admittedly, it's less attractive for IPOs. It's very hard to do an IPO, although we're very fortunate that Maynilad will list, and that's already I guess, a good feather for the cap for the Philippines. But we'll have a lot of deals next year. In fact, later on this month, we will list a capital market deal, but it's fixed income for SM Prime. We priced it. It's very low, and it's 17 billion oversubscribed. So it shows that there is appetite, especially for fixed income. We also did the listing for San Miguel's preferreds last week in the PSC, oversubscribed. There are many other deals happening. So next year, maybe the flavor is fixed income, a lot of preferred shares that will be very successful. We have some IPOs lined up. We're working with the President Mon Monzon and Chairman Francis Slim on doing maybe IPOs for preferred share issues because there's a special ruling that the PSE did that no one's availing of. So I will work with the regulators to push for that, and maybe we can list some companies next year.
Yeah, we'd be looking forward to seeing more bright spots. Speaking of bright spot, a little left field, but still within the DNA of this show because it pertains to, the economy. The Michelin Guide has officially arrived in the Philippines. This is a huge cultural and economic milestone for the country, and it puts the Philippines, Manila and Cebu specifically, on the global culinary map. And from a business and tourism perspective, from your lens as the president of BDO Capital, what do you see? What are the good things you see coming off from this?
Okay. So that was a pleasant distraction for all this floodgate and negative news, right? When the news came out, our phones were buzzing. Who are these 8 companies? Who is this 2-star? One company was the 8-star. What does a Michelin Select mean? What does Bib Gourmand mean? We were all researching where are these restaurants because we all want to try them. In fairness, Secretary Franco of had told me, I think it was earlier this year, that the Michelin was coming. And so I was just, of course, hopeful but not expecting it. It did come through, push through. What does that do? That's good because that means that there'll be a lot more tourists coming here to try our food. And even among local tourism, that should improve. And people will now travel to taste all these restaurants from all over the country, even Tagaytay, Cebu, etc. So I'm very happy because, in fact, I was just watching the New York Marathon live stream last night. New York Marathon brought in $1 billion for that activity. Maybe because of this Michelin restaurants now and the rest. There are more tourists who come in just to try our food, which is very, very good.
Mm-hmm. Another thing that may get people to come, Ed, the weakness in the peso, right? That drove people to Japan. How might that help us trying to look at it with a silver lining?
Correct. Let's look at it. Yeah, of course, it's bad. It's sad for the importers. It's more expensive, right? But it makes it cheaper to export, right? But yeah, from the tourism perspective, it should be good because it becomes much cheaper for all the tourists to arrive. So people will now visit the rest of the country, and that's good because yes, our tourism numbers have been low, especially from inbound tourists, right? But at least when I talk to the Cebu Mactan Airport and NAIA, because we funded both of them, the numbers are pretty good, right? And you remember what San Miguel remitted. It's a record number because the local tourism is compensating for the inbound foreign tourists. So that's good. There'll be more flights, and that's very good for the country. And because of the foodies, lots of foodies, these Gen Z, Gen Alphas, love the experiences. we think that will be a boost for all the provinces.
Okay, Ed, we've got, some figures coming out this week. We've got GDP, we've got inflation all out this week. The PSE index, we're at 58.24 right now. All this downside in the PSE index and in the macro picture, is this possibly a sign that Malacanang may not be doing enough to bring up confidence? What do investors want to hear?
Yeah, no, I guess if from my perspective as a Filipino, I mean, what we would like to see is, it's been months since the president's SONA. So we'd love to see some convictions, really. It's great that the ICI made these recommendations, but the ICI has no power, really, right? So it's really now down to the ombudsman and the Sandigan to catch some big fish. I guess it's not enough for just the engineers DPWH to go to jail. So we want to see what will happen now with I guess Mr. Ko and the rest who've been given notice. I just hope something happens there because it will also bring in confidence because governance is so important. Governance is what makes foreign investors come in, even the local investors come in. With strong governance in the country and the corporates especially, that's what keeps some of the companies, doing very well. It's not just the numbers, it's but belief in the management and how they run things.
Yeah, taking a look at the numbers, my gosh, the market, everything is down by well over 1%. So early in the trade, this is so unusual, this massive sea of red that we're seeing. So hopefully we get a Christmas gift by way of justice from Malacanang. We shall see.
We hope so.
Yeah,
we
Ed,
hope so.
Thank you so much for your time this morning.
Thank you. Bye-bye, Maiki.
The Organization of Petroleum Exporting Countries, or OPEC, agrees to a modest output increase for December, a move that could stabilize global prices and ease pressure on fuel importing economies like the Philippines. Larger increases are on hold amid fears of oversupply. New Western sanctions on OPEC member Russia are also weighing on output decisions. Oil prices fell to a 5-month low of about $60 per barrel on October 20 on concerns of a growing glut, but have since recovered to around $65 per barrel on optimism over U.S. trade talks. The group has also decided to pause further production hikes in the first quarter of 2026, signaling a more guarded outlook for demand. Oil prices climbed in early Asian trade following that decision. Brent crude futures rose 47 cents to $65.24 a barrel. U.S. West Texas Intermediate crude was at $61.43 a barrel, up 45 cents after gaining 41 cents in the previous session. Analysts say stable oil prices could help temper inflation in Asia and provide some breathing room for energy-dependent economies like the Philippines. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us and keep it here on BNC, the Bilyonaryo News Channel, and have a good week ahead.